What's up, everyone? In this video, we're going to be taking a deep dive on why the stock market is just tanking. And no, we're not going to be, saying a very simple explanation like, oh, the stock market's falling because Russia just invaded Ukraine. No, we're going to take a deeper look into market cycles, momentum, and just how the market has reacted to different phases in the past. So we have a really good video today, everyone. Basically, we're going to explain what's actually happening right now besides what we see on the headlines on CNBC. So let's get right into it. So we can see if we look at the S&P 500, it's been brutal over the past couple months. There's been a lot of selling pressure, a lot of stocks have been falling, and it has not been fun. Now, if we do zoom out, we can see that overall, the S&P 500 is still in a pretty nice uptrend. Over the past, basically since forever, the stock market has done very well, and it's been pretty consistent along the way. And it will probably continue to do that for the future, right? But for the short term, it has been very volatile, unpredictable, and it sucks, So we'll leave it at that. It sucks, right? Now, looking at why this is happening, of course we have, what we see on the headlines like Russia just invaded Ukraine and, U.S. and China tensions are rising and inflation's getting out of control and oil prices are rising. And while those are all valid concerns, there's a lot more that's going on behind the scenes that no one else is really talking about. So if we look at the S&P 500, just as a quick example, essentially the price of the SPY is just, I guess you can say, a reading of supply and demand. Obviously, when there's more demand for the SPY, it goes up. When there is less demand, it falls down. So when there's more buyers than sellers, it rises. When there's more sellers than buyers, it falls. That's a very simple explanation, and I'm sure everyone is already aware of that. But it's going to play a key role when we look at some other examples like Zoom. So Zoom is one of those stocks that I own for the long term. I've been buying the dip for a couple months now. It's a long-term play for me. I think it's a great stock. That's a topic for another video. But I want to explain some of the cycles we've seen with Zoom over the past couple years. So I know we have these giant boxes on the screen right here. I just drew them. So we could see from, I guess you can say, January of 2020 all the way up to October of 2020. Zoom stock was the stock everyone was talking about. The stock literally went from $72 up to almost $600 in less than a year. That is unheard of, but then again, everyone was on Zoom. The world was locked down and schools, businesses, and everyone was using Zoom. But the stock was just going crazy, right? Everyone was talking about it. Everyone was buying it. And it was just in a bullish cycle. In these bullish cycles, you don't really have too many people shorting the stock. And for the people who are, I guess you can say, a little bit out of control, who are using excessive amounts of leverage, they're kind of in the clear because the stock is just continuing to rise up. So what I'm trying to say is when we are in these bullish cycles with stocks, whether it's Zoom or DraftKings or Disney or Apple or anything, it's basically sunshine and rainbows, right? No one's worrying about what might happen in the future. It's just that, hey, today the stock's rising, everything's great. So there's not too many shorts coming in. The people who are using margin are fine, and stocks, it's rising, it's awesome. But eventually that bullish cycle ends. And you get in kind of like a consolidation phase where it's just not as many buyers are coming in and more sellers are coming in too. So instead of the stock price just rising each and every day, the stock gets a little bit more, how do I say this, a little bit more normal, right? It just kind of moves up a little bit, kind of moves down a little bit, but it's mostly stagnant. And that's exactly what we saw in this orange box. We can see from, I guess you could say late October 2020 all the way to September of 2021, the stock it fell, but it was choppy and stagnant, and it didn't move too much. In this orange phase, you can call it the consolidation phase, that's when we have, I guess you can say, these short sellers coming in. And we have less buyers coming in too. Like I said, in Zoom's case, in basically all 2020, everyone was just buying Zoom stock because it was continuing to go up. But when Zoom stock, I guess you can say, just stagnates for months, it doesn't have that same hype. less people care about it. So you have less buyers flowing in, and at the same time, you have more short sellers coming in because they say, maybe Zoom is actually a little bit overvalued. And this is in the phase where it's like stock's not really moving too much. And then we get into this like bearish cycle where all hell breaks loose. So basically when we get in this cycle, the short sellers are going pretty hard. They're in a good position most likely because the stock's been falling. 2, we have like no buyers flowing in because the stock's tanking, and who wants to buy a stock that's falling? Most people don't, even though it's probably the smartest thing to do. But we have less buyers coming in. We have short sellers in a great position. But then when we get in this like red/bearish phase, we have the people who've been buying the stock at 400 or 500 or 550 or even 350 start to sell out. They say, you know what? I bought Zoom at $450. It hasn't done anything for almost 2 years, and now it's at $250. I'm going to sell out. And then that adds to the selling pressure. And then you have people who bought in at maybe $300 saying, I bought in at $300 and it went all the way up to almost $600. I should have sold out there, but now the stock's at $180, so I'm going to sell out. And then we just get in like this all-out, this horrible phase where you have a giant combination of basically no buyers coming in. You have people who've been owning the stock start to sell out, and then you have short sellers continuing to increase their positions or their short positions on the stock during this phase. So these 3 phases give a nice and simple explanation on how the stock market works. And this is specific to Zoom, but you can apply this to almost any stock. And that's kind of what we're seeing now with a lot, but not all stocks. Zoom being one of them, but you can also compare this chart to stocks like DraftKings or Disney or Square or even PayPal. Like PayPal is a great example. If we zoom out on this one, like 4 years, like we can see it's been in a great bullish uptrend since you could say, actually, it's been in a bullish uptrend for quite some time. So I guess you can say March of 2020 all the way up to maybe July of 2021, and then it went through a consolidation phase from July to maybe like October 2021, and ever since that happened, it's been in free fall to the current day. So you can draw these cycles on any stock or chart you like, but the main point is understanding what we're seeing in the market right now. And the reason I bring this up is because some of the stocks that I'm holding for the long term, like Zoom, DraftKings, Disney, Square, and a decent amount of other ones, are in these, I guess you can say, phases where all hell is breaking loose. But the most important thing to keep in mind is that while the market is irrational sometimes, and while it sucks to see the market do stupid things, it's also a blessing in a way. Because if we didn't have these times where the market just did crazy things, you're like, why is it doing this? There would really never be any great opportunities in the market. Like, just imagine if the market was just perfectly priced all the time. If that was the case, there would be no opportunities to, have a great deal or a great stock to buy and own, or like, a great stock to buy now. If the market wasn't crazy sometimes, there would never be those awesome opportunities. So what I'm trying to say is, while the market does dumb things sometimes, it's kind of necessary if you plan to be in the stock market for the long term, because without the market doing dumb things, you wouldn't have those opportunities. So that's the main thing I wanted to emphasize. And I also want to talk a little bit more about when we get in these phases of all hell breaking loose, specifically with Zoom, because this is a good example. Let's say with Zoom, when it got into this, sellout phase around, I guess you could say late September 2021. Like I said, you have the combination of short sellers coming in. You have the combination of a severe lack of buyers coming in. You also have the combination of people who've been owning the stock start to sell out. But if we want to talk a little bit more specifically about that, we have what are called margin calls. So let's say someone has $50,000 in their brokerage account, and they say, you know what? Interest rates are so cheap right now, inflation's so high, I'm going to take out a loan and I'm going to invest this loan into the stock market. So they have a $50,000 cash portfolio and they borrow $50,000 to buy Zoom stock. So overall, they have a $100,000 Zoom stock position, but they only have $50,000 cash. If they were to buy Zoom stock at $500, once it gets down to $250, they are forced to sell out because if it goes any lower than $250, they are in a margin call. So this is just one simple example, but there are a lot of hedge funds out there and other funds and investors who use margin, and sometimes it can get pretty nasty. So that is kind of what adds to the selling pressure, because I know sometimes you look at some of these stocks like Disney or DraftKings or even Square or PayPal, and you say, you know what? PayPal just went from 310 all the way down to 96 in a couple months. Why is it like this, and how can it even fall any lower? And then you just see the stock fall more and more each day. It's because when it rains, it pours. Like when we have stocks falling, it's a combination of short sellers. It's a combination of lack of buyers. It's a combination of people who own the stock selling out. And then you also have to worry about people who own the stock and who are in margin calls being forced to sell their positions even if they don't want to. So there's a lot of factors that play into the market that you have to be aware of besides just reading the headlines, because there's just a lot more that goes into it. And then another thing I want to emphasize with all this craziness going on is how to take advantage of it for the long term. In the short term, anything can happen. The S&P 500 right now is at $4,177. This thing could be at $4,000 next week, or it could be at $4,500. No one knows what's going to happen in the short term, but the main thing is if you see stocks out there that you want to own for the long term that are at good valuations in your opinion, your best bet would be buying and holding them. The best buying opportunities ever since the market was created were in times of peak fear. If we look back at, let's say, a 20-year weekly chart on the S&P 500, when were the best buying opportunities? It was in 2009. You could say March of 2009. Yeah, like right around March of 2009, when the peak fear was in the markets, when everything was looking the worst. If we also look at another example, in March of 2020, that was the best buying opportunity over the past 2 years. And at that time, no one knew what was going to happen, like in the world, we didn't know enough about COVID at the time. We really didn't know what was going to happen, but that was when that was when people got the best returns. So what I'm trying to say is, when you see peak fear, historically those have been the best buying points. So consider setting yourself up for success with a long-term portfolio. You guys know I love stocks like Zoom, DraftKings, Disney, Square, and a lot of other ones, but that doesn't mean it's right for you. The main point is, if you have stocks that you like for the long term at good levels, consider starting a long-term portfolio, because that's the best way to go. So all in all, I really hope you guys learned something from this video. The market's crazy right now, but like I said, it's kind of a blessing, because these crazy times are what allow us to have those good opportunities to make a lot of money and have a fun time doing it too. So if you guys learned something from this video, please consider subscribing and leaving a comment down below. When you guys leave comments, I don't think you guys know how much it helps. I really appreciate it. And yeah, thank you guys so much for leaving all those comments. And like I said, if you are new here, please consider subscribing. But other than that, thank you guys so much for watching.